Welcome back, fellow crypto enthusiasts, to another exhilarating episode of We Will Crypto. I'm your host, Anonymous. Today's Thursday, June 29th, 2023, and today we've got a whirlwind of news stories to cover. Bitcoin's rise, fueled by optimism surrounding a potential ETF approval, sets the stage for an exciting discussion. We'll explore the impact of the upcoming economic data release and the actions of short-term Bitcoin holders. Additionally, we'll delve into ARK Investment's amended filing with a surveillance sharing agreement and Germany's denial of Binance's custody license. The growing appeal of cryptocurrencies to young individuals and the integration of VR, AR, and blockchain in education will also take center stage. Lastly, we'll uncover the trillion-dollar market opportunity presented by asset tokenization. So fasten your seatbelts and get ready for a captivating journey through the ever-evolving world of crypto. So buckle up and let's dive right in. Bitcoin has been on the move, folks. The world's most famous cryptocurrency rose by 0.5% in the past 24 hours, reaching a milestone above the crucial 30,000 mark. The price hike is attributed to the optimistic anticipation of regulatory approval for a Bitcoin exchange-traded fund, or ETF. All eyes are now on the release of economic data, particularly by the U.S. Personal Consumption Expenditures Index for May, which could serve as a catalyst for the crypto market. Will Bitcoin continue its ascent? We'll soon find out. It seems that short-term Bitcoin holders are showing their cards. According to Glassnode, an on-chain analytics firm, these speculative investors are sending 35,000 Bitcoin to exchanges, indicating their inclination to sell at the 30,000 price level. This surge in elation inflow reflects their desire to capitalize on recent price increases. However, if the price keeps rising, we might witness a shift in the composition of hodlers as the urge to take profit intensifies. Stay tuned to see how this potential shift in market dynamics unfolds. The race for a Bitcoin exchange-traded fund is heating up. ARK Invest, a prominent contender, has made an important move by amending its filing with the Securities and Exchange Commission to include a surveillance sharing agreement, or SSA. This agreement, aimed at preventing market manipulation, has gained attention as a crucial step toward investor protection. With this revision, ARK may have improved its chances of getting approved before competitors like BlackRock. The cryptocurrency platform involved in the agreement remains undisclosed. Let's see if ARK's efforts pay off in the ETF race. Despite hawkish remarks from the U.S. Federal Reserve Chair Jerome Powell, Bitcoin has managed to hold its ground above the 30,000 mark. Alongside Bitcoin's resilience, institutional players like Fidelity are preparing to file their own Bitcoin ETF applications, signaling growing optimism in a step toward mainstream adoption. Meanwhile, Solana's Sol token shines as the top gainer, while Dogecoin experiences a dip. The total crypto market capitalization slightly increased, and Bitcoin dominance reached its highest level in over 2 years. As we await further developments, the crypto market remains dynamic and full of surprises. Shifting our focus to the regulatory landscape, Germany's Federal Financial Supervisory Authority, or BaFin, has reportedly denied Binance a custody license. Though the exact nature of this decision is not yet clear, it adds to the growing challenges faced by the world's leading crypto exchange. Binance has been streamlining its European strategy and complying with various regulatory requirements, but it seems that further work is needed to meet BaFin's standards. As the EU's new crypto regulation looms, Binance remains committed to collaborating with regulators and ensuring compliance across jurisdictions. And also, Binance is facing challenges on multiple fronts. Binance's Euro banking partner, PaySafe Payment Solutions, has announced that it will no longer support the exchange after September 25th. This decision comes amidst increasing regulatory scrutiny in Europe and the United States. Binance is currently dealing with a lawsuit filed by the U.S. Securities and Exchange Commission alleging violations of federal security laws. In response to these challenges, Binance has been restructuring its operations. It recently withdrew its regulatory approval application in Austria, gave up registration with Cyprus's security regulator, and decided to exit the Netherlands after a failed registration attempt. Binance is streamlining its European strategy to comply with the upcoming crypto regulations in the European Union. The world of cryptocurrencies continues to attract the next generation seeking financial freedom and innovation. Young people, disillusioned with the limitations of the traditional fiat system, are finding hope and opportunities in crypto. Jordi Weiser, the president and chief investment officer of Vice Multi-Strategy Advisors, highlights that the freedom, accessibility, and potential for decentralized innovation in the crypto world resonates strongly with young individuals in Asia and beyond. As the allure of crypto grows, so does the potential for talent and growth in this transformative industry. Education and technology are joining forces to reshape the future of learning. Virtual reality, or VR, augmented reality, AR, and blockchain technologies are revolutionizing the way we acquire knowledge. In formal education, VR allows students to explore immersive environments, collaborating on projects, and engage in simulations, while AR brings concepts to life by overlaying digital elements onto real-world objects. These immersive experiences enhance understanding, engagement, and retention of knowledge. In the workplace, VR enables realistic simulations for hands-on training without additional cost or safety risks. And let's not forget the role of blockchain technology, which securely stores educational data and ensures privacy and protection against unauthorized access or tampering. The integration of these technologies holds great promise, requiring collaboration among educators, businesses, governments, and technology experts to unlock the full potential of hybrid virtual learning environments. In other news, asset tokenization is on the rise, and major financial institutions like JP Morgan, BlackRock, and Goldman Sachs sees it as a trillion-dollar market opportunity. Asset tokenization involves converting real-world assets into digital tokens on a blockchain, which offers fractional ownership, increased liquidity, and improved transparency. This innovative approach spans across various asset classes, including private capital markets, intellectual property, asset-backed securities, and fixed income. The potential is enormous considering the vast notional value of assets outside the traditional financial system. Institutions are actively exploring use cases for tokenization, such as digital assets, intraday funding solutions, private equity feeder funds, and tokenized mutual funds. As blockchain smart contracts and token securities become more integrated, we can expect enhanced asset mobility, efficient payments, decentralized finance or DeFi participation, and global market connectivity. The financial industry is poised for a paradigm shift, unlocking new transaction experiences and improved access to traditionally illiquid assets. And now for SEC news. The U.S. Securities and Exchange Commission has cast its regulatory net over nearly 70 cryptocurrencies, classifying them as securities. This move, which requires registration or exemption, has sent shockwaves through the digital asset industry. The affected tokens, including BNB, BUSD, Cardano, Solana, and Polygon, have collectively lost over $5 billion in value since the SEC's complaints were filed. The broad categorization by the SEC has raised concerns and sparked debates within the industry. Critics argue that the agency's arguments lack in-depth analysis, while others suspect a motive to slow down the adoption of digital assets in the United States. Domestic exchanges have been forced to delist these tokens, with delistings on US-based platforms reaching 22% in 2023, primarily driven by Bittrex and Binance.us. This precedent-setting action by the SEC could have implications for future classifications, and it's expected that stablecoins and decentralized finance will be the next targets for regulatory scrutiny. Ethereum, the second largest cryptocurrency by market capitalization, has found itself at the center of ongoing regulatory debates. Ethereum co-founder Joe Lubin believes it's a foregone conclusion that Ethereum should be classified as a commodity. Lubin cites a 2018 speech by former SEC Commissioner Bill Hinman, which many interpreted as stating that Ethereum was not a security. Additionally, the Commodities and Futures Trading Commission, or CFTC, already considers Ether a commodity along with Bitcoin and Tether. While SEC Chairman Gary Gensler is yet to make a clear statement on Ether's classification, members of Congress are working on legislation to establish Ether as a commodity. Lubin emphasizes that the evidence is clear, even if some regulators remain hesitant. As the regulatory landscape evolves, we eagerly await further clarity on the classification of Ethereum. Meanwhile, FTX, the bankrupt crypto exchange, is making strides toward a potential reboot. The CEO of FTX, John Ray, has been engaging in talks with interested parties to secure financing for the relaunch of FTX.com exchange. The company is actively seeking investors and potential bidders to support the reorganized exchange, offering creditors a stake in the new venture. While FTX still faces challenges in recovering nearly $2 billion in missing funds and addressing allegations of misuse of customer assets by former leadership, the legal team anticipates completing the launch of the revamped exchange in the second quarter of 2024. The exchange is expected to undergo a rebranding with a different name as it aims to regain trust and establish itself as a reliable player in the cryptocurrency market. As we navigate through the rapidly evolving landscape of cryptocurrencies and blockchain technology, it's crucial to stay informed and adapt to the changes. Regulatory developments, market trends, and technological advancements shape the future of this digital ecosystem. It's an exciting time filled with opportunities and challenges as major financial institutions explore asset tokenization, education embraces immersive technologies, and the classification of cryptocurrencies continues to be a topic of debate. Stay tuned for more updates and insights on the fascinating world of cryptocurrencies and blockchain. Thank you for joining us today. We hope you found this episode informative and engaging. Stay tuned for our next broadcast. Until then, take care and keep exploring the ever-evolving world of cryptocurrencies.